And let's see.
It says webinar streaming live on Facebook.
It says done. Here we go. We are live. Hello, everybody. Welcome to our Facebook Live sponsor spotlight with Rancho Ted. Thanks for joining us today, Ted.
Yeah, no, thanks for having me. I'm excited to be a part of this.
Absolutely.
Good stuff. You know, the one thing I love is, and I actually enjoy when people don't say my last name because it's so difficult, but the last name is no longer exists. It's just Rancho Ted, which is great, you know.
Good.
Everybody's like Ted, how do you say that, Ted? And it gets to be a fiasco. So
I almost went for it, and then I decided I would just keep it casual with Rancho Ted, and I'm glad to know that you prefer that.
Yeah, it's a pain, man. If I could change it, I would change it to good. Teddy be good.
Teddy be good.
Yeah.
I like that. Well, Rancho Ted is easy to remember, and so that's great that you've branded yourself and your business and everything. It all goes together. So thanks so much for coming on today. We've got a couple committee members on the call as well. Elisa Geddes, Giovanni Ruiz, and Laura Kressig. Thanks for hopping on, guys. For anybody who's watching, hope you all are tuning in. Rancho Ted is one of our sponsors for YPN this year, one of our platinum sponsors. So we're super thankful that you're involved, and we really appreciate you supporting our network. And we have some questions for you because and we wanted to highlight you and hear about your business and hear about how your business has been affected during all of these crazy times, and just to learn a little bit more about private money. So thanks for taking the time to do this.
Yeah, no, fantastic. Glad to be here.
Yeah, so just to kind of kick things off, can you tell us a little bit about, Elisa has some more in-depth questions, but I want to hear a little bit about how you got started in this industry and what brought you to hard money loans.
Yeah, so I started back in 1991, and I was really heavily into coaching soccer too. I used to coach college at UCSD in a club called the Nomads. So it worked out pretty nice to be a mortgage broker and do soccer at the same time. It gave me that freedom. And I tell you what, it was a great ride. Really enjoyed the conventional world and did it for 17 years. And it was really, in the 90s, it was just like normal lending. And then 2001 and 2 hit, and then you get to the easy qual loans, which got to the point of ridiculous, which was 100% stated income, no nothing. And you got a house. All I had to do was the loan app. And I thought, my God, this is crazy. And then in 2008, it went the complete opposite way. It got to the point where it was so hard to get a loan done that it became no fun being a loan officer in the conventional world. So all the subprime had gone away, and I was thinking I did not enjoy being a mortgage broker because it was too difficult. And I give a lot of credit to people who are mortgage brokers these days because it's not an easy job. And I just recognized subprime was no longer there, and that private money would probably be back in the fold again. So I had friends who had been doing this for a long time, 30, 40 years. Well, they're up to 30, 40 years now. So I decided to switch over to do that, and very grateful I did, because one thing about private money lending, it's all about common sense. If the loan makes sense, you do it. In the conventional world, if it makes sense, you still don't do it. And that just did me in, man. I couldn't take it. So I switched over, and that's how I got into the private money world full time.
Very cool. Very cool. And you are located in North County, San Diego, or what is your territory and what areas do you service?
Little Italy.
Okay.
Nobody has an office in Little Italy. I do. But I'm connected to the Little Italy Association because when I first arrived in California, I used to work for a fresh pasta company. I became a junior partner. And the owner of that company, I left in 91 to become a mortgage broker, and he closed it down and started business districts, and he started Little Italy. So I've actually been a part of Little Italy since '91 and saw the growth of the whole community, which has been absolutely amazing, isn't it?
Very cool.
So yeah,
Yeah.
so my office is with the Little Italy Association because that's where their office is. So I've been friends with those people for 35 years.
Awesome.
So that's where you can
Well,
find me.
neat. Well, we are excited that you are part of our North County Association of Realtors Young Professionals Network,
Yeah,
and to help you, to build, more connections and network up in North
yeah,
County. So thanks for being a resource for us and answering
yeah.
some questions. I'm going to kind of turn things over to Elisa. She's got some great questions prepared. So Elisa, take the reins.
The question
Okay.
lady.
Well,
All
yeah.
right, Lisa.
Melody
Right
stole
on.
my first question, though.
Sorry.
It's okay. No, it's good to hear your
Oh,
background. You have such a dynamic background for someone who's in lending.
yeah. Well,
Um,
just gotta mix it up, right?
yes. So I guess the next thing we would probably want to ask is, with all the lending, the variety of lending institutions that are in the market right now, how do you guys differentiate yourself
Yeah,
at Rancho Ted?
sure. Well, the difference really, there's been a lot of changes actually with what's happened with the market, and we're going to get into that a little bit with COVID. But the bottom line is we lend on equity, not on income and not on credit. It's all about loan to value. And if you have loan to value like 70% or less, for the most part, you're going to get a loan. So I hate to say it's almost that simple. And obviously, the other part of the conventional world, it's all about ratios and making sure you fit into the box. And so that's obviously the biggest difference. But we also lend on all different types of properties where construction, a lot of people won't do that, or land
Mm-hmm.
loans, people won't touch that, or people from another country, blah, 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 it can go on forever. So that's what makes us different. We lend on equity and not on so much the borrower.
So you guys are focusing on more of the out of the box type of
No, we like
situations
it
where,
in the box. We like
oh,
it in
you
the
like it in the
box, but
box
that's
too?
what we
Okay.
get. But we can't get those. Yeah,
Okay. So you'll take it all.
yeah.
So
Well,
can I chime in?
Sure.
I was just I'd love to hear a little bit, this is probably pretty basic, but for some people who aren't very familiar with hard money, it's come up for me a lot with, working on back property, in Fallbrook. A lot of people don't lend on land. So it's pretty common that people think you need to buy land have cash to buy land. So what are the typical scenarios if you want to break it down for somebody who might not know anything about, like, when would you call a hard money lender? And those are, for land and like kind of those things that you mentioned.
Yeah.
And
There's a few main reasons, let's just say a land loan, land loans are so difficult. And, we've done not a lot, but we've done some. They're kind of risky loans because if you take them back, then it's no bargain to sell land at times, and then you get no income off of it. But there are times where you can, we've done deals where the property, God, I think it was 1.2 million. And then the borrower came in like with 20%, which is like 240,000, and then the seller carried back like 300,000, and then we lent 500,000, somewhere in that range.
yeah.
So there's different ways you can structure deals where a bank will never have work with a seller carryback or actually land itself. Most people won't touch it. So there's an example of a deal you can just kind of make happen that most people couldn't do it.
Yeah.
And here's another one too, just real quick. I'll educate you guys. So you can have people buying a piece of land that has a ton of equity in one of their other properties. So you can actually cross collateralize the other property and combine both, So there are times where you can just come in with 10% or no money down if there's enough equity in the other property. So there's all different ways to make deals work. as long as there's equity in the properties. So I could go on forever. So next question.
Okay. So obviously with all the changes in the world due to COVID, how have you had to change your business to work in the world today?
Yeah, it's a change actually mostly for the better. There are the non-QM loans that were very popular. And those are loans, I call them hard money bank loans. And it's like going to the bank, but you don't need to qualify. It's all stated income and it has to be investment for the most part. When Wall Street, everything was tanked over there, they stopped doing those loans. And so I actually was able to do those loans myself at times because it makes sense for some borrowers, but that got wiped out. So now really private individuals are really the only source of getting loans done for the most part right now. So if you don't have your own investors, which I do, then you're kind of in trouble. A lot of hard money lenders have closed up for a while. A lot of the flipping companies have stopped lending, or the non-QM. But real quick, one thing I want to point out to you guys is, it wasn't brought up in this on the questionnaire, but all of you could be investors, and it's probably one of the safest ways you can invest money because you have collateral, the real estate. So when you lend, you get a property for $1 million, and the borrower has to come in with 300,000, you 700,000. If each of you give me 100,000, and I get a person with 200, then you are the bank. And every month you get a check at 9%. So if he doesn't pay, you have the collateral. So as long as it sells for over 700,000, right, you get your money back. So it's really a great way to invest money, and it's very low risk on losing your money. I've never lost anybody's money actually. So keep that in mind down the road too, as an investor. Because go ahead.
Quick question. So I have a client that sold a property and he netted about $250,000. So you're saying that he could potentially be an investor with you, and you combine with a few other people, be on the note for a property that you loan on. Correct.
So we do all different size loans. I've got a loan right now for $100,000. I can't even remember where it is. So 4 of you can give me 25,000. It's some Brawley. That's where it is, Brawley. It's just for $100,000. So 4 of you can give me $25,000, and you can make 9% on that money. It's an incredible way. Most people have never done it. Most people don't even know it exists. Every time I speak, nobody's ever done it. So keep that in mind, though. Anybody who's listening, give me a call if you want. Normally you like to take a minimum of at least 50,000, but we'll give you the North County deal for 25.
So the YPN discount.
Yeah, the YPN discount.
So another question.
So yeah.
So once they get.
So anyways, I'm glad we
gets into the deal, then they're receiving the 8 or 9% until that person repays back the loan, and then they find another deal.
That's correct. So normally we like to do loans, and this is a good question for you. How long do our loans last? So I have all types of investors. I have investors that'll lend for 1 month. Most people don't want to do it for 1 month. They want a minimum of 6 months, because why give it for 1 month and get it right back? So usually the loans are for 6 months minimum. The average loan we do is normally 1 year, but we do loans for 2 years. I do have sources that'll go to 7 years. So it's all over the board. Most people paying 9% don't want to pay it for too long. So they find a way to either sell the property or refinance it, or who knows what. Some don't mind. They keep paying. So yeah. Okay. Yeah, so keep that in mind. Yeah.
What about, can you give a loan on the flip side? Like they want to buy a property that if once it's all finished, it's worth, $700,000, and the seller is willing to sell it to them for $400,000. Can you go over kind of how that would work on the buyer side? Like if they want to potentially like flip that property or.
Sure. Sure. This one, I'm not going to get into great detail because flipping is really a whole nother animal because it could take a long time to explain all that stuff. But let's just say you buy it for 400 and you're going to put 100 into it. So how you do that is you actually take the purchase price, you put the 100,000 on top of the purchase price. So now you're at 500, then throw closing costs, let's say 550. With that, you come in 20% of the 550, which is like 120,000, I'm guessing, 110. So you give a loan of 440, and then the after repair value has to be 65 to 70%, which is around 700 after it's repaired. So that's how flipping works. It's really, well, there's all different ways to make it work, but my God, it's a whole nother subject. We'll be here forever on the flipping. So yeah. There's a lot of flippers out there, man. A lot of flippers. They're always trying to make, find ways to make money. So,
have you seen, or like, are you guys getting a lot more inquiries regarding private money lending right now since all this stuff happened? Or?
Well, in general, I do a lot of marketing and branding, and so all that kind of pays off after a while. So I've been getting a lot of calls just in general on, at least 5 to 10 calls, at least 5 calls a day, on somebody for some reason is looking to get private money. I wish there were all deals. I'd be really rich. But, out of like every 10 calls, you probably get 1 deal. You need a lot of calls to get good deals, so a lot of deals you might just pass up because it's just too risky. You don't want to make a mistake and get anybody mad at you losing their money. So
do you get a lot of, I guess as an agent, if I come across a situation where a conventional lender is not going to help my client, what's the best way for us to come to you and get information for our client or for ourselves?
Oh, well, obviously, the easiest way is to grab the phone. But it's really not hard to, what I do is actually very simple. You'll call, the agent will call me up, and first thing I'll say is, what's the value? What's the loan amount? Right there, I already know if I have a deal. If it's 70% or less, I know I've got a loan. Let's say that, oh, well, they only can put down 10%. And I said, well, you got another property you can cross it with. So I'll start asking questions to see if I can help them make it work. And then if they don't have a cross, well, can the seller carry back 20%, which doesn't happen too often these days, just on real, land. But there's all different ways. So, yeah, for the most part, it's really if you feel there's equity in that property, and the downside of private money really is the cost of the loan, and that's where people, hard money back in the day was like 12 to 14% and like 6 to 8 points. It's now down to like 8 to 9% and 2 to 3 points. So it's really not hard money like it was. So, but the cost of the loan really is the frustrating part for people, because when they go through a mortgage broker, you can build the rate into the loan. So if your rate's 3%, and they say, oh, I don't want to pay any points, then you go to 3.25, no points. Well, private money doesn't work like that. You have to pay those loans up front. So those points up front. So it's normally 2 points, sometimes 3, sometimes 4. 2 points on 500 is $10,000, and they're like, holy mackerels. And then 5,000 for the title, escrow, and all that, it's 15,000, or gets a, which in general is a lot of money, but in the big picture, not really. Not in this real estate. Yeah.
So that basically has to come out of the consumer's pocket up front.
Yeah.
Wow.
Yeah, and that's the turnoff sometimes. They like, they lose their minds, like, but that's how we make our money, really,
Yeah.
The investor makes it off the interest rate, we make it off the points. So that's loan
Well, yeah,
costs.
everyone's got to get paid, right?
Yeah,
So
I
I
feel
guess,
guilty sometimes. Like, oh man.
Money's got to come
well,
from somewhere.
yes.
Yep.
So is that kind of like a good ballpark? Like if someone was, say someone was wanting to buy land or do get a hard money loan, it's kind of like you have to have 30% to be able to put down is kind of the minimum.
Yeah, it's kind of the standard. And that's just for like residential. Land loans are 50%.
Okay.
So if it was $1 million, you have to come in with 500 unless the seller will carry back. So 30% is kind of the magic number. It's a little, right now everybody's still concerned about values, but it appears values are holding pretty good.
Yeah.
So, but some may want 35%. Some investors have gotten a little bit nervous and they're just on the sidelines till all this ends. And some investors doesn't phase them at all. Where's the next loan, So everybody's a little bit different in this whole environment.
I have one more question. Dealing with title and escrow companies during all of this, I know I actually got a couple new clients in the title industry because there were some title companies that weren't wanting to underwrite hard money loans. Did you get any pushback? I know that we were still insuring them. We just kind of added a couple requirements that the underwriters were asking a couple questions like, what exactly are you doing with the money? They were just a little more nosy about what they were doing with it. Did you see much pushback from?
Yeah, no doubt. There's been a little bit on the title end of it. I don't give names out because I want to keep every title company happy. But it's been a little bit more challenging with that. I'm glad you brought that up. That's a good point.
And that's just everybody trying to eliminate risk, Yeah,
it's this is really like what was going to happen to the world, and obviously we still don't know what's going on. It's got so crazy, but when that pandemic hit, I mean, everybody's thinking, oh my God, the stock market's crashing, and it turned out real estate held its own, not enough properties. That's really the key, right? If there's no properties, then values hold.
Yeah.
Inventory. So.
Awesome. Thanks for touching on that.
Yeah, no, thanks. For bringing it up.
I guess, do you want to, does anyone else have any other questions? Or I think it would be nice to kind of end on maybe one of those deals that you put together that can kind of educate us on things that you can do. But that was something that was a huge success that, you never thought you were going to get done, but you did.
Sure. I think one of my all-time favorites was I got a call on a Thursday, and this guy said he had to buy a plane from Thailand by Tuesday. And I said, so I need to find money in 3 business days. And you need $250,000. So I said, well, do you own any property? And he goes, yeah, I own the free and clear property in Scripps Ranch. And I said, and we quickly looked up the address and found out the value's around 400, 450. And within 3 business days, we were able to get him the loan to buy the plane. So that was pretty exciting.
That's awesome.
Wow.
That's what a plane cost $250,000. So he said if he didn't have it by Tuesday, it was off. They couldn't make it work. So, but
I'll tell you, very reasonable for a plane.
Yeah. Yeah, but I've flown in one of those small planes, and it's still, like I'm the co-pilot, and I'm thinking, geez, something goes wrong, I have to fly this plane. I'm thinking, what am I doing up here? One of my partners has planes that he flies to the properties with. So, anyways, I get the pleasure of flying around with them. So, but I'll tell you one of the craziest. There's all kinds of loans. I do webinars now. So if you want to check me out, I do webinars, and I'll come and do lunch and learns. But the craziest loan I ever did was a guy up in Calabasas, and the loan was for $900,000. It was a single family that was not in great shape, but good enough shape. And so he brought in $325,000. So he lent him $575,000. And so 9 months into the thing, my friend, he did it with me. he got a thing from the insurance that it was canceled. So he called the guy up and he said, hey, how come you canceled the insurance? He says, well, I don't need it. He goes, you don't need it? He goes, yeah, I tore down the house. So the guy
Oh
became a
my.
loan and he tore down the house without telling us. So
Oh my God.
now we've got a
Oh
land
my
loan.
gosh.
And I'm thinking, oh my God, like it's one of those, oh my God moments, So what do, right? You're like, the guy's still paying. And so he's going to build a house. So, all right, we don't have a choice here. We either take back the land or let him build a house. So he started letting him build a house, and then he got divorced. And then everything. So the beauty of private money, at least on this particular case, was the land was worth, he sold the land for $675,000. Our loan was for $575,000. So he ended up getting out of that deal. So it's all about loan to value. But yeah, when somebody tells you you give a loan and they tore down the house, it really, that'll shake you up. So
That's not a phone call anyone wants to get.
yeah, no. So anyways, yeah, it's all over the board as far as, like I said, no down payments. I've done a deal up in Sacramento where values are much lower, obviously. And guy came with no money. He had a free and clear property. He had a property free and clear for 150. He bought one for 250. No money down. So there's a nice, nice way to get a deal done with no money. Trying to think. Foreign is, obviously those are can be challenging for banks, right? With no income, no anything. We just closed one of the crazier deals from China, but it closed. So they can be challenging some of these things, but yeah, no, it's all over the board. But
typically when someone contacts you, how long does it take to get, I guess, the whole process going and to get the money?
Yeah, 14 days we try to do. I mean, I've done it in 3 days, but the stress that's on everybody. In 7 days is not hard either, but it puts a lot of stress on everybody. The escrow, the title, everybody's running around with their heads cut off trying to close this thing. So too much pressure on everybody. So we try to do 14 days. It's kind of a nice pace where nobody's losing their mind. So 14 days is kind of the magic number. We can do it in less, and then more you're like, oh my God, this thing's taking forever, So 14 days. So yeah.
Sometimes when they, somebody's making an all cash offer, they're making an all cash offer, but they're getting hard money, and then the person asks for proof of funds, and maybe they have like the 20%. Do you guys issue them like something like a pre-approval, or you just...
Oh yeah. Yeah, no, I mean, it happens all the time, really. Just pre-approvals, just like you said, if they want to see the money, they'll have to get it from the borrower of the 30%. But so, with private money, sometimes I have borrowers who don't even use their own money. They work a deal with a friend or somebody. So that gets investors a little bit nervous when it's not their money, but there's still investors that will do it as long as, they get the collateral. So, how it used to make me crazy at tracking the money. Where'd the money come from? It's got to be their money with the conventional world, Well, we see a deposit here of like $100,000. Where did it come from? Or it could be 50,000. They're like, where'd it come from? In the private money, it doesn't really matter. We certainly want to know. We like it when it's their money, but it doesn't have to be. So wherever they get it from, no big deal for the most part.
All right.
Yeah.
Jackie Camacho, one of our past chairs, is watching, and she did post a comment on our Facebook Live that I think we kind of answered. She said someone who needs money for the first time on their first investment, what do they need? Down payment? Do you fund a whole project? So I think that was kind of answered on, typically 30%. And then if it's land, 50%. And do you want to expand any more on that?
I'll go a little bit into how you look into a borrower. So let's say it's 30% down. And anytime somebody's buying, it's nice because they're putting money into the deal. So simple, let's say it's 700,000, 30% is what, $210,000. Common sense says they're not going to walk away, right? Nobody walks away from 210,000. So, oh, I made a mistake. You can have the property. They don't do it. So it's pretty safe to do a purchase. They can have some real credit issues, but again, to walk away from $210,000 is very, very hard to do, obviously. But when you're pulling out cash on a refi, then you start to look at it a little bit closer. So I've got one right now where there's a lot of credit issues, and the loan to value is getting up near 60. And you're starting to say, I don't know, man. Common sense says it's starting to get borderline here. FICOs are in the 500s. They're in debt. The rents will barely cover the mortgage. And it's like, what's the purpose of this person even keeping the property, sometimes. So you start to, when it's cash out refis, you start getting a little nervous. When you look at the borrower a lot closer to make sure you don't make a mistake and use your common sense on who you lend into, and you kind of do a little due diligence on their background. The biggest mistake I ever made was, a guy did a Ponzi scheme, and he just got sentenced to jail for 12 years in April. But this guy was putting so much money into this property. It was a ranch, and he had put $1 million into this thing. And we lent him $850,000 on a $1.5 million property. And he just kept putting money into this thing. And I said, where are you getting the money from? And he said, oh, he was a financial advisor. And turned out he was stealing the money from them, putting it into the property. And then the whole thing fell apart and he couldn't make the payments and we had to foreclose. But again, we were saved because it's all about loan to value. So even if the person makes all those mistakes, as long as you had a certain loan to value, you're protected. So everybody got all their money back. But that was one of the more crazier deals I've made, where he fooled a lot of people, and now he's in jail paying for it. That's for sure. So there you go, all over the board here on different type. There's so many different types of loans that happen, man. I just brought up that one. So 30% down is really the number. Yeah. Certainly like to see good credit scores, but people don't have credit sometimes, or who knows, they get divorced. This happened just recently. You get divorced. One of the spouses don't make the payments. FICOs drop like a rock. Well, common sense says, that's the reason for it. They're not bad payers. They just got into an argument and somebody's like, well, I'm not going to pay, blah, blah, blah. So you don't get too concerned over it. Sometimes with FICO scores, and there are reasons for it,
Awesome. We did have one more question come in on the Facebook Live thread from Mike Hadries. Thank you, Mike, for watching and asking a question. He says, hey, Ted, can you tell us about an example of a typical value add multifamily project in San Diego where they needed hard money to purchase, renovations? Renovations? Kind of.
So, yeah, when he says multifamily, he's looking like a whole bunch of units, 5 to 10, 15. Well, I'll tell you what, some deals construction's a whole different animal. I've been stuck in a deal for 3 years now on a ground up construction loan. That's just one thing after another. So we're very concerned sometimes when we do construction. I've got a guy doing 4 units right now down in Barrio Logan area. And he was halfway complete on there was a house and then he built 3 units. So he stepped in and helped finish the project for him. Lent him like $700,000, and when it's all finished, which is just about done now, it's worth about 1.2. So I'll tell you what, if the loan to value is good, then it's probably not much we won't do. I've got a lot of investors that's done development, so they're not afraid to do the loans, and if something goes wrong, they can step in and finish the projects. They certainly don't want to do that, but at least they know they can. So it depends on the loan to value on what you're talking about. If it's a good loan to value, renovation, no big deal. Loan amounts can be challenging though sometimes. If you're talking $4 or $5 million, that money's not the easiest to come by, but there are a lot of funds out there that have now stopped lending, so that money's not that easy to find right now. Yeah.
Awesome.
That's all great information.
Yeah, we could talk forever on this stuff. At least I could.
I know.
Never
Well, it
asked-
sounds like every deal is so different, and it's just, you know, how you structure it and put it together, and you just have to have.
Yeah, you know, it's really, you know, when you just said, all of a sudden I started thinking like, you got to weigh up who you're lending to. That's, you know, like the guy with the Ponzi scheme. I mean, my God, you know, it's just unbelievable. You don't know who so you gotta, you know, yeah, you gotta look at the overall picture. Yeah, it's really, yeah, it's kind of nerve wracking a little bit because you don't want to lose anybody's money. And so you're like, oh boy, you know, all of a sudden you get a call, there's no payment. You're like, oh no, you know, it's always something. But for the most part, you know, hundreds of loans, I've only had two bad loans. So that's pretty good record, knock on wood. But
awesome.
you still get calls though that they can't make the payment, and you know what, people get in spots. You just work with them. You know, you certainly don't want the property. So, and if, for the most part, I mean, everybody does seem to get out of it one way or the other. They'll either sell it or they'll borrow some money or whatever it is to make sure, you know, everybody gets paid. So
Good to know though, and it's great to have a resource for those times when someone's trying to do something creative, which I think we're going to see more of. And, you know, especially in our area, there's more opportunities for people to buy, you know, land or do different kind of construction projects. And so it's great, you know, to have you as a resource and for people to know that they can come run these unique scenarios by you. You know, if they have multi-families who are going in on something and seller carries involved, you know, that might be a great situation to get some insight from Ted. So thanks for.
I got one more.
And also
one more I want to bring up real quick, and it's bridge loans. I've got one right now. So there's so many people who get trapped with, they need to sell their property to buy the next property. Or they may find the property, they're like, oh my God, you know, but they can't do it, you know. So we do a lot of loans where we lend on the current property that they're living in. So for example, I've got one right now, almost similar, 700 and 700, but they only owe $50,000 on the first, which is really obviously nothing. So plenty of equity. So what we're going to do is give them the down payment of, let's say, $300,000 on their property. That'll be the down payment for the purchase, and then we'll give them a loan on the purchase. So they can go purchase that property and then in turn sell this one and then pay us off or pay us down. So keep that in mind. You can take money out on your property to purchase the next property, and so you don't have to go through the contingency issue, because as we know, nobody wants a contingency offer. So there's a good one right there. I get one of those, like one a day or one a month, at least one a week. I mean,
nice.
All right.
Awesome.
Cool.
Any other questions from anybody? Anybody watching? This is your last chance to type a question in the chat. I'm glad we had some people participating with questions on those. No, I really appreciate you taking the time to come on, and we wanted to really highlight you because we're really thankful that you're sponsoring YPN this year. And, you know, unfortunate that we're not all together and having events, but this was pretty cool. to be able to have you on here on Zoom. And, well, if anybody continues to have questions, send us a message. Always feel free to reach out to Rancho Ted. We will post his information below here in the comments. And it's great to know because you're few and far between that we have such a resource. So thanks for making yourself available.
No, my pleasure. And I can't wait to have our network events again, back having happy hour at 4:00 at some house. Right?
The lucky house on tour.
Yeah.
It'll make us very grateful for when we can all be back together and finally do that again. But for now, this was pretty great. But thanks everybody for watching. Thanks for hopping on. And
thank you.
All right. Thanks.
Thanks, Ted.
We appreciate you.
All right,
Thanks,
you guys.
Ted.
See y'all.
All right. See you later. Thanks again.
Bye.
Bye.